Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and we're back here now with Dr. Robert McHugh, whose work I highly recommend and actually implore you, my listeners, to go to technicalindicatorindex.com to pick up a free one-month trial subscription to Dr. McHugh's prolific and very valuable work. I'm finding it to be extremely valuable to me personally, especially now that we're entering some very troubled waters in the equity markets. Well, Dr. McHugh, I'd like to ask you a little about some more of the tools that you use, and perhaps the one that is most intriguing to me is what you call your Plunge Protection Team Indicator. I think you also refer to it sometimes as your demand power supply pressure gauge. The whole notion of our government manipulating markets is an anathema to the fundamentals of free market economics. And you have a way of measuring how much the Plunge Protection Team is buying in the stock market to keep it from falling. Could you talk a little bit about your Plunge Protection Team gauge?
Well, what I do is I measure demand and supply every day, so I get a gauge on how powerful the day's move was. Was there a lot of demand on, let's say the market rallies, was demand really strong, or was it a weak rally that maybe a few stocks pushed the market up, but it was a weak rally? Was it strong or weak? So I measure the demand and supply every day, and basic economics 101, demand and supply, equal out at the equilibrium price. Somebody sells, somebody else has to buy. And that's an efficient market has a lot of buyers and a lot of sellers, and they agree at the end of the day on the price of the market. So everybody's happy, and it's an efficient market. But when I see in my measurements that demand power is substantially moving, they're supposed to move in the opposite direction. And when demand power's opposite move is different than supply pressure's move. In other words, if demand power falls 5, supply pressure should rise 5. That's a balanced market that's efficient. When I see demand power, let's say, rise 5 points and supply pressure drop 19 points, that's an imbalanced, inefficient market. That tells me that the market was not able to provide bids for all the selling that went on. The large institutional investors, the mom and pops, the brokerage firms, the daily buyers of the market weren't there. And that in order for the market to settle, somebody had to step in and provide bids at the closing price, or else we would have had a crash.
Right.
Because there would have been no bids and prices would have had to continue to drop.
Right.
So what I do is I measure this every day, and when I see this imbalance, it means that the Plunge Protection Team had to come in and buy the market to establish that day's price and prevent an all-out crash. And we see a lot of that going on in the last month. There's not a lot of bids out there from the market. People are afraid. They're not buying. So the Plunge Protection Team has been coming in with both hands and doing a lot of the buying right now.
Yeah, I remember the other day, I think you mentioned to your subscribers that it looked like almost half of the buying was coming in from the PPT. And so this is the kind of thing that I find makes your service so valuable. To have that kind of information is very, very valuable. It helps you sort of understand what position you should take or what the probabilities are of the market going in one direction or another. You talk about the market being heavy. I guess that's what you're talking about. If the supply pressure is 19 and the demand pressure or the demand power is 5, then obviously that's an out of balance market, and certainly it's a heavy market that suggests downward pressure, and that's what you've been seeing. So after today, you'll take, after we finish at some point in time here, I guess you'll probably look at today's markets and come up with some number for your subscribers.
That's right. We'll measure supply and demand again tonight and draw a conclusion of what kind of a underlying market we had. Do we have the sufficient bids for an efficient market, or was this another day where the government was buying it hard to prevent an all-out, flat-out crash, which would be my suspicion based upon what we saw today.
Yeah, and I know today the market turned fairly abruptly late in the afternoon, or after lunch anyway, in which Janet Yellen was supposed to have made some statement about the economy still being strong, which I don't believe. I don't buy that one at all. But nonetheless, that's the propaganda that we still have 3% growth, or we're going to have it, and the market's turned around. And then I would be interested in knowing and I'll be looking forward to your missive that comes out again today to see what conclusions you've come to with that plunge protection team measure. You look at other things like trend lines, moving averages. You look at something called the Phi-Mate turn date and the Bradley turn dates. Could you just take a minute perhaps for our listeners, describe what those two turn dates are and what do they mean?
Okay, the Phi-Mate turn date is something I came up with about 10, 12 years ago. And what I noticed was that major tops and bottoms in the stock market, where you get significant trend reversals, occur on a regular basis. A Fibonacci percentage of time between each other.
Mm-hmm.
I went all the way back to 2007, and phi is the number 0.618.
Mm-hmm.
And it's a universal number. It actually is an infinite number. You can never solve it. It's like pi.
Mm-hmm.
And it is a key number for all. Man's body has been designed with phi.
Interesting.
Our most pleasing architectural structures have the one side of this. If you're looking at a rectangle, the length will be 61.8%. The depth will be 38.2%. That's the most pleasing structure to look at or a picture.
That's fascinating.
If you look at the solar system and the universe, God has put a phi relationship in so much of what we see in physics. And so it's also true in the markets. We're finding out that tops and bottoms occur a phi percentage of time from each other.
Mm-hmm.
Not every turn, and not the minor ones, or if they do, I don't measure those, but the larger ones do.
Mm-hmm.
And so what I do is I calculate the scheduled Phi-Mate turns each year. At the end of the year, I put out a schedule of the 5 or 6 major turns we can expect the next year off of this 5-date analysis. And it's remarkable how close these dates are to turn dates. And the same thing with the Bradley model, only that's a completely independent and totally different view of turns. And that was created by Donald Bradley. And that looks at the astrological relationships of the planets and the stars, and does a comprehensive calculation because they've proven that the psychology of mankind is moved by the gravitational forces of the planets and things of this nature.
Mm-hmm.
And so, using the Bradley model, they come up with the 5 or 6 key market turn dates that are likely each year, and then I present these dates to my subscribers so they can get a feel for what is a possible turn date coming where you can expect a reversal of the current trend. And you never know quite if it's an up or down move until you get close to it, because whatever trend is going in, it'll reverse, but you don't know exactly what that trend is until you get closer to the actual turn. But what you can do is be aware of these dates and kind of say, okay, we got a turn date coming. Let's be careful here. This trend that we're seeing now may not continue forever. Looks like we're going to have whether it'll be a corrective reversal or a new permanent trend reversal. There'll probably be some kind of a reversal, and they're usually accurate to within a week or so. And I'd say they're probably 90% of them work. There's always the 10% that doesn't, but it's a fascinating additional indicator to kind of take a peek at.
Uh-huh. Well, I hope our listeners are getting a sense that Dr. McHugh does a very thorough job with a lot of different indicators, and I think that you do a remarkable job of keeping objective about these things, Robert, and I really appreciate your work. I think you do a remarkable job. Bearish divergences such as advanced declines as well you look at, I know. And anyway, it's just so many things that you talk about, and you cover so many bases. I know that you work extremely hard, and I'm very appreciative for all you do. I have to ask you, you see this jaws of death? I think you see it in the Dow, you see it in the NASDAQ and the S&P, all three of the major indices?
See it in the S&P and the Dow, and the NASDAQ has something a little bit different, but just has a rising bearish wedge, which is just as bad.
Yeah. How do the technicals look from your point of view? Do you watch the Asian markets, the European markets, and some of those as well, the major indices for any of those?
Oh, yeah, we have a jaws of death in the European stocks 5E index. the largest companies in Europe are looking at one of these jaws of death as well and forecasting a major decline.
Mm-hmm.
So, we're seeing internationally a lot of troublesome patterns as well coming simultaneously with what we see in the United States. We think we're headed for a worldwide severe recession. I think it'll be a depression. I think it's starting now. I think it's going to continue to get worse. And some of the things that we thought were never possible will happen.
Mm-hmm.
And it's sad. It's frightening. I warned everybody about a year ago so people could do things to prepare and do the best they can. And with God's grace, we get through it,
Yeah.
But
yeah.
It's not going to be a pleasant period of time we're heading into. I wish I could say it was going to be great, but it's not.
Yeah.
Based upon the indicators I see, the patterns I see, and the measurement of the psychology of mankind that we're watching right now.
Right. Well, certainly, I think difficult times sometimes can either bring out the best or the worst in people, and I think that sometimes difficult times bring a spiritual awakening and a reconnection sometimes with people's faith and help them understand their origins and why they're here. So I think it can also be a blessing on one level, although it's as you say, not going to be very pleasant. One of the things that we try to do on this show, and I do in my newsletter, and I know you do as well, you do follow the precious metals. How does gold look to you now?
Well, I think gold will be a safe haven. It'll head higher eventually. I think what's going to happen is the Fed will reverse course and start printing money like crazy when it becomes evident that the sky is falling. And when that happens, gold will just skyrocket. Gold, I think, will trudge a little bit higher in the short run, and then once the Fed changes its tightening policy and just starts rolling out the printing press again, because that's the only thing they know what to do, gold will fly high, very high.
Do you look at silver? I'm sorry, go ahead.
Yes, I think the same thing. I think the same thing for silver too, both precious metals, because I think that what will happen too is the fiat currencies will become under enormous risk because they print so much of it.
Mm-hmm.
And I honestly think the only way out of our unfunded trillions of dollars of unfunded liabilities, I think at some point there will have to be a currency change. At some point that they will have no choice but to establish a brand new currency with a new relationship to debt, to try to get rid of the debts that way, to basically wipe them off, erase them. Mm-hmm. And at that point, gold will be very, very precious to have, and should be a tremendous medium of exchange for the new currency, whatever they come up with.
Yeah. Well, certainly somebody makes the point on this show, David Jensen talks frequently about how the paper markets are exactly that. In London and New York, the paper gold markets are massive futures markets, and only about 1% gets settled in actual bullion. But in fact, the Shanghai market is 100% bullion market in which nothing but gold is exchanged. There they have to deposit their gold before they're allowed to sell it. So it's a more honest market, I would say. But we see what you call the Plunge Protection team, I suspect, are some of the people that are coming in and driving the price of gold down exactly at a time when it seems it should be going in the other direction. But, as you say, there are limits to what the Plunge Protection team can do, right? So speaking of limits, Robert, I'd like to know then, how do you view the Treasury markets? Because there have been people, so many people I've known, so many of my friends, people that are hard money, honest money orientated people, who have been predicting a decline in the Treasury markets for some time. The U.S. Treasury market just keeps getting stronger. Every time we have declining markets, equity markets, money flows into Treasuries. The dollar has gotten stronger recently relative to other currencies. So we see money flowing into the U.S. Treasuries. But do your charts tell you anything about U.S. Treasuries?
Yeah, they say that the Treasury yields are going down and that the price of Treasuries will go higher. This is a key safe haven, and once the Fed starts throwing money back at the economy after they realize this thing is going down the chute, they will have to buy more bonds and monetize the United States debt, and that's a huge buyer for bonds, and that will force interest rates lower and prices higher. And that's going to be one of their traditional tools to try to re-stimulate the economy when they realize we're headed for a deep recession. They're going to buy bonds, push down interest rates, and I am not expecting interest rates to rise. I am not.
But then when the confidence is lost in the currency, that might change, I would think.
I don't think it will, because Treasuries will be seen as a huge safe haven internationally. As everything's fallen apart internationally, people will flock to buy the U.S. Treasury. We still have the strongest military on earth. We guarantee the Treasuries. It's an instrument of the government itself, whereas the dollar is not. And so I honestly think that the Treasuries could diverge with the dollar. The dollar could drop, and Treasury prices could rise at the same time.
Very interesting. Yeah, that's certainly a different view than I've heard from many other people, but I want to thank you for that. Robert, I know that you and I, well, we share a Christian worldview. From that vantage point, how do you view what seems to be an increasingly troubled world? Do you really think this is different this time? You know, we go back through history all the way into the Old Testament days before Christ, and there were an awful lot of horrible things happening throughout history. Do you think this could be something different this time?
My faith and my studies of the Bible tell me that, yes, this could be a difference this time. One of the big differences this time, and I'm getting into a little bit of Bible study here, is the book of Revelation talks about end times tribulation period coming. Within one generation of the reuniting of Israel as a nation. And that happened in 1948. In Psalms, it defines a generation of 70 to 80 years. You add 80 years on to 1948, you get to 2028. You add 7 years, you get to 2018. The Bible describes that just prior to the end of that period, there'd be a tribulation period of 7 years. And that a lot of the things that we're seeing, I believe, in seeding in the infancy of what we're looking at right now, seem to tie in very clearly with what the Bible describes as signs of the times of a dramatic period of tribulation for the entire world that the likes has never been seen. And I just feel as though that's possibly what we're looking at right now. It's just, my belief, my feeling, based upon my studies, but I'm not by any means an expert in the Bible. But that's what I see. I don't know.
Sure.
What you can say.
Sure. Well, I think anyway, you said that's a possibility. You're not saying that you know for sure. In fact, I think Scriptures warns us that we're not to know the exact time of the return of Christ. So, but I appreciate that. I can see what you're saying. It makes a lot of sense. It could very well be the case. So I really want to thank you for your excellent work, Robert. I really appreciate reading your material, especially when times get troubled like this. I think your service is so important, and this is why, again, I would tell people to go to technicalindicatorindex.com. And before I let you go, just give our listeners a brief review of what you offer. Now, the service that I subscribe to, I think I signed up for 6 months this time. It's a very reasonably priced service, and then you have another service that you provide for. It's more expensive. It's for people that are trading more actively, right? Could you just explain the two levels of service that you provide?
Sure. People can get in for 30 days for free in the standard subscription, which is not a trading service. It's the one you subscribe to, where I give comprehensive daily reports and the expanded weekend report with a lot of the indicators and commentary charts and so on of what's going on in the markets. It's not really geared for trading. As part of that service, what I do provide is a mock $500,000 conservative investment portfolio model where I present a scenario that should benefit in preserving wealth for that particular economic time that I see. And it's more of an educational offering where people can just kind of take a look at it and consider what I'm doing and then make their own decision as to whether they want to take advantage of anything I'm doing or not. Then I have within a conservative portfolio, I say that 5 to 10% of a person's total portfolio, let's say 90% should be in something conservative, safe, and wealth protective. And then I say 5 to 10%, it's okay to speculate. Be aggressive. to try to trade the up and down moves of the market, to try to enhance overall returns for the entire portfolio by just putting a few dollars at risk that have an opportunity to generate extraordinary profits, so that at the end of the day, that 5 to 10% may be contributing more to the overall portfolio's return than the other 90%, and at the same time you preserve most of your wealth. And that's the Platinum Trading Program. It's just simply for people that are interested in speculative, aggressive, market timing trades, use options because they have leverage in the market, and it's an educational tool. I mean, it's not telling people what to do or not do. It's showing them what my thinking is on a trade, what trade I'm doing at that time in speculation, something I feel has a potential to produce a return that is extraordinary. And, of course, there's risk with that. There's losses are possible, so I recommend people limit each investment, each trade they make to a certain amount of money that they can afford to lose. And hopefully at the end of the day, there are more winners than losers, and then the overall speculative portion has contributed some nice earnings to the overall conservative portfolio.
Yeah. Well, I think that certainly makes a lot of sense, and I know that you also provide updates and let your subscribers know how those recommendations are doing too, and you do that on an ongoing basis. I might just say in closing that I have not signed up for that more expensive service, but I have found your basic service to be very, very helpful to me, Robert, over the last couple of weeks in earning some profits on the short side of the market through some ETFs. Just in general, to have a sense of which direction the market is going, it's worked out very well for me. And I would tell my listeners, again, it's technicalindicatorindex.com. Go there to learn more about Robert, and you heard that you can actually get a trial subscription for free for 30 days. My sense is that if you take Robert up on that, more than likely you're going to want to continue with his service, because especially at times like this when things are really getting very, very tenuous and very troubling in many ways in the market. So I want to thank you very much, Robert, for being with me again today, for sharing your time. I know your time is very precious. You're courageous. You're a very courageous person in sharing your faith and honesty, and I really appreciate it. Thank you very much for being with us once again.
I appreciate you too, Jay. Thanks for all you're doing with your listeners, and I appreciate your show and the wonderful message you bring of truth, to listeners. Because in this day and age, it's so hard to get our arms around the truth. There's so much spin thrown at us that we just want to know the score so we can make the appropriate adjustments for our personal lives. And I thank you for what you do in that area.
Amen to all that. Thank you very much, Robert, and look forward to talking to you again sometime in the not-too-distant future. Thank you so much.